North Sydney Council was about to have another go at a rate rise, and if this feels familiar, that's because it is. Last year, Council went to the Independent Pricing and Regulatory Tribunal asking for permission to blow through its rate cap. The ask was enormous, an 87% increase over 2 years. It was front-loaded, poorly received, and landed right in the middle of the scandal around the Olympic pool cost blowout. IPART rejected it outright. The regulator accepted that Council's finances were in trouble, but concluded the increase was too big, too fast, and too poorly justified. It also noted widespread confusion and opposition from residents, much of it tied directly to the pool. In short, IPART didn't trust that Council had brought the community with it, but now Council is back. At an extraordinary meeting next Monday, councillors will decide whether to lodge another application. This time, the headline number is smaller. The new proposal is a 52.66% increase over 3 years, 23% in the first year, then 15%, and then 8%. After that, rates stay permanently higher and only move with a peg. Council's argument this time is that this is a different proposition. More measured, better explained, more consultation, more modelling, more boxes ticked. And we're told this is not about the Olympic pool. That claim needs to be treated very carefully. Council insists the pool will be funded regardless of what happens with rates, and that the increase is really about long-term financial sustainability, infrastructure backlogs, and keeping services running. All of that is technically true. It's also beside the point. The reason Council's finances are so fragile is the pool. The reason infrastructure renewal has been cut year after year is the pool. The reason debt climbed and cash buffers disappeared is the pool. Saying the rate rise isn't about the pool is like saying a hospital bill isn't about the accident. What's also missing from this conversation is Council's own balance sheet. North Sydney Council sits on a property portfolio worth hundreds of millions of dollars. It routinely acknowledges this, nods towards future opportunities, and then moves on. In practice, it has chosen not to seriously advance what would appear to be the obvious alternative option, unlocking value from land it already owns. The most obvious example was the Ward Street car park, sitting directly above a metro station in Victoria Cross. But it's far from the only site. Properly developed, these assets could generate very substantial returns, potentially in the hundreds of millions of dollars, without permanently lifting rates. Instead, while asking residents to accept a more than 50% reset in those rates, Council merely says it will look at property opportunities at some unspecified point in the future. Council has done more work this time. There's been more consultation, there are surveys and reports, and a long-term financial plan running hundreds of pages. But none of that changes the underlying problem. A catastrophic capital project failure combined with a reluctance to seriously pursue alternative funding sources before going back to ratepayers. It's also worth being clear about what next Monday's vote actually does. Councillors aren't voting to raise rates, they're voting to try again, go back to IPART and argue that while 87% over 2 years was unreasonable, 53% over 3 should be acceptable. That's the real question. Not whether Council needs more money, but whether spreading the pain out, downplaying the pool, and deferring the property question is enough to restore trust.